6 minutes left to go in today's session, and it is time now for the closing countdown. Let's trade the close with Bill Baruch, Blue Line Futures President. Bill, what are you watching into this close right now?
I'm looking back at Friday's non-farm payroll number, and it was highly anticipated, but the market reaction was fairly muted. You know, wage growth came in better than expected. We're seeing some less worse data out of Europe this morning, and we were eyeing CPI on Thursday, which has been a fairly strong number of late. So what we're seeing here today is the 30-year bond. The prices are coming in pretty strongly today, or pretty weakly today. The yields are firming up. We're at the highest level in about two and a half weeks on the 30-year bond yield. Lowest level in about 3.5 weeks on the prices. And I think there could be a little bit more room here to go. If you see this chart, there is a trend line that we broke out above, and we can pull back down in the prices to test it. It aligns near with the 50-day moving average, and that's at 160. On top of that, you're seeing the 2-year and the 10-year yield curve. It hasn't been negative for about a week now. That's a good thing. And you know what else likes that are the banks. The banks are on fire, and we're seeing the XLF up. There's some good room here for it to run a little bit further, just above 28.5. But some of these other banks also have some really good room to the upside, like JP Morgan. If it gets a little bit of a tailwind, it could be at all-time highs potentially here. Again, it's about this yield story, and I think there's room for yields to continue to stabilize and that 2 and 10 to stay away from an inversion.
But Bill, is there a small chance then offsetting that the Fed doesn't cut? Would that hit the markets if they didn't cut?
The market itself would not like the fact that the Fed did not cut. Now, I think the banks would overall outperform some of the other sectors, and I like that about the banks right here. Right now, there's only a 10% probability, or just under a 10% probability, that the Fed won't cut next week. And I see the reason why they won't, and they don't have a whole lot of powder. But if they use it here, they have even less powder. So I think that CPI number on Thursday is going to be crucial. And then the ECB is expected to cut rates by 10 basis points deeper into negative on Thursday as well. But that's already priced in. So their rhetoric and their narrative, as well as that CPI number, are going to be very, very closely watched on Thursday.
Bill, just to go back to the XLF for a moment here, the fact that financials are the best performing sector, one of the best performing sectors so far in today's trade right now. How much of this hinges for you, this trade, on what comes out of CEOs and CFOs this week at the conference?
That's crucial. I mean, we've started to see a little bit of upbeat, from Wells Fargo in the second half of the year, as well as Citigroup is on fire here today. I think it's Jamie Dimon tomorrow, and he's going to set a good tone. Like I said, I think JP Morgan has some room to the upside, and that's where we could see JP Morgan potentially be a high flyer again tomorrow.
Bill, we'll leave it there. Thanks so much for joining us.